Double tops are one of my favorite ways to capture really big moves out of price on any financial market. If price is heading higher and I see a double top, depending on how and where that double top forms, they give me the opportunity to predict with a really high degree of accuracy whether or not that specific asset is going to reverse and start heading lower in a very dramatic way. And double tops are one of the most underutilized patterns in the industry, in my opinion. So in today's video, what I want to do is teach you everything you need to know about trading double tops. And if that sounds good, all I need you to do is click that like button for me. Go ahead and subscribe if you are new and click the notification bell. And I will be right back after you watch the intro and disclaimer. See you in a second. Welcome back, and let's go ahead and dive right in. So what is a double top? A double top normally occurs after price has been in an uptrend, as in making higher highs, higher lows, higher highs, higher lows, higher high, higher low, and then at some point we make this higher high and we fail to make new higher highs, right? This is our first sign of a double top. And what it's telling us is that there is not enough buying pressure for price to continue higher in this uptrend. And what this can be is a great initial indication for a reversal in price. So how do we trade things like a double top? Well, we'd be waiting for this specific scenario where we're making higher highs and lows in an uptrend, and then we would wait on this failure to break into new highs. We'd wait on some confirmation, and then we would have a higher probability of price reversing and heading lower than price heading higher. And what we would be expecting from this area is price to reverse, just as we can see it doing here on the Aussie dollar. The next thing you need to have in order to incorporate double tops into your trading plan and into your trading arsenal is specific rules for double tops. You want to be consistent in the way that you're trading them. Consistently profitable trader. It's in the words, right? Consistently profitable. You must be consistent while you're trading. So let's talk about a consistent way that we're going to be trading double tops. So in a very simple way, what I'm looking for is price to create that higher high. Once price starts to pull back, I want to create a zone between the highest wick and the highest body before that pullback occurred. Something like this. As I said, I'll zoom in a bit to make it easy to see. We want to make this zone between the highest wick and the highest body of our first initial top before this pullback. Now, why do I do this? Well, for starters, I do not want to see price push higher and then close above my initial top. Why would that be the case? Why don't I want this scenario to happen? Because a close above this high would indicate that buyers do and are providing enough pressure to push this market continuously in the uptrend that it's already been in for a while. So if this happens, I am discounting this as a double top. Another thing I want is to make sure that we at least do get a double top, as in price at least tests this first top with a wick. A body of a candle can close inside of the zone. A wick can go above the previous high. But what I want to make sure of is that we don't have a close above this high and that price at least tests our first top either with a wick or the body of a candle. That's the reason I create this zone, and I call this my termination zone, as in price can terminate in this zone and then start heading lower. Those are my rules for a double top. And if we push price ahead, you already know this because you've already seen it, but as you can see, this does happen in the case of the Aussie dollar. We have price pushing up. We do in fact get a test of the first top, and we do not have a close of a candle way above our first top, indicating trend continuation. So we call this a failure to create new highs. So now that I have a failure to create new highs, we need to talk about entries, right? Now that you know how to spot these double tops, let's talk about entries. So in terms of entries, we're going to talk about three different entries. We're going to go from the most aggressive to what I consider the most conservative. And the most aggressive way that I enter on these types of patterns is to wait for this scenario and then a red candle. Wait for a failure to break into new highs, to close above the previous high, and then just having a red candle here shows selling pressure after a failure to break into new highs. That is what I would consider the most aggressive way to trade a double top. Now, in terms of slightly less aggressive and a more conservative way, I would wait on what we call the break of a neckline. So right here on this double top would be what we consider the neckline of the double top. And the reason is double tops are normally M-shaped. We have what we call our first top, we have our neckline, and this would be considered our double top. So what we are looking for this more conservative way is for price to close below the lowest low of our neckline. That would be a more conservative way to enter. And for what I consider the most conservative way to enter on double top trades, I'd be waiting for price to break below our neckline like we have now, then get a pullback to this area followed by a red candle. That would be what I consider the most conservative way to enter on double top trades. So now that you have what a double top is, how we can trade it, the rules around double tops, and the 3 entries going from aggressive to conservative, let's take a look at some live examples on the charts, starting with a live trade I'm in right now on the pound yen. Before we go ahead and take a look at the pound yen live trade I'm in, I want to ensure that you have a good handle on this before we talk about the whole strategy in general, which we're going to do right after this. I'm going to talk about some confluence that I like to add to this that makes it wildly accurate. But before I do that, at this point right now, you see where price is. We've pushed up. We've created a pullback. And just so you know, I don't look for a double top everywhere. I only look for these, again, with confluence. In this case, let's say your confluence was this little area of structure looking left that's been tested here and here. And also looking left that has been tested over here as support. So with this being the case, this would be an area where if price did, in fact, push up, start to pull back, I would start looking for that double top. So how am I going to do that? Do you remember from the last part of the lesson? What we're going to do is create a box, a termination zone from the highest bodies of this entire swing high area, which would be right here, up to the highest wick of this entire swing high area. So that would go from these bodies to these wicks, or this wick, and that would be our termination zone. We want to see price push up to this zone. We can see price touch this zone. We can see wick go past it. What we cannot see is a candle close above this zone. Anything else, as long as we touch the zone in general, would be completely fine. So let's push the market forward and see what happens. And we're going to discuss entries one more time too, because again, I just want to ensure that you understand this before we move forward. As you can see, we get into the zone. We do not close above the high. Therefore, we have a termination in the zone. In terms of our most aggressive entry, what was that? Our most aggressive entry would just be selling pressure from our termination zone, which is just a red candle. Our second most aggressive entry would happen right there as we start to close below the neckline of this pattern. And our third most aggressive entry would be after the close below the neckline, getting a pullback into the neckline and a red candle. Okay, so hopefully now all of that is completely clear. Let's move on. Take a look at some of the confluence I like to add to create a full strategy out of double tops, and take a look at the pound yen live trade I'm currently in. Okay, so here we are on my live pound yen trade, and I'm really hoping to see price continue lower, hopefully down into these lows. But right now, not looking so good. Coming up here, pressing against the 200 EMA. Before we even get into this trade itself, though, I want to talk to you about the full strategy and give you my favorite confluence that I use with double tops. So this is going to cause you to use multiple time frames. For me, my trading time frame is a 4-hour chart. I'm a swing trader, and my higher time frame is going to be a daily. So this is what I look for whenever I'm placing trades using double tops. I have 2 different scenarios. One of them is a counter trend scenario. So let's say we have something that happens like this with price. It's pushing down, and then we begin to push higher. As we begin to push higher, this would be considered the start of an uptrend. Since this is a counter trend way of trading these, what I do, if this is my daily chart, is I'm pointing out all of the levels of resistance looking left, okay? I'm not talking about the levels of support. I know we've talked about this before, but for this specific strategy, I'm just looking at previous resistance levels. And for counter trend trades, one of my favorite ways to trade these double tops is to wait for price to get to these levels, then drop down to my 4-hour chart or my trading time frame. Your time frames can vary. It's totally fine. Just use a higher time frame for structure, a lower time frame for the pattern. And in these areas, I like to look for the double top scenario. Now, this is where I use that most aggressive entry the most often, because this is my favorite confluence with double tops. And what I see more often than not is that these areas cause a push down that at least hits my targets. Now, again, I consistently do this as we continue to trend up with each resistance level that's higher than the previous one. So as price got to here, again, I would go down to my smaller time frame, look for a double top scenario. As price gets to here, I would go down to a smaller time frame and look for my specific double top scenario. That's one of my favorite ways, and this would be the counter trend version of looking for structure on a higher time frame and trading these on a lower time frame. Now, this is by far my absolute favorite way to do this, and that is with trend continuation. In this case, we'd be looking at price doing this in a downtrend. Once we break below this previous low, for trend continuation, I want to mark that level, and then I want to see price come up to that level. This happening on my daily chart. I then, at this previous level of support, would drop down, or do drop down to my 4-hour, and I look for that double top scenario on the 4-hour. Again, this is one of the situations where I allow myself to trade that most aggressive entry. And I'm going to give you some ways that I trade the more conservative entries a little bit later in the video. But this needed to be clear before we discuss the pound yen trade. Now, let's go back over to that live trade. Here we are in that live trade, and let's delete most of this stuff. Actually, I don't need to delete it. Let's go out to the daily. On the daily, as price was pushing higher, what do we have? Well, as price started to push higher, I actually marked this level. I then marked this level. Why this level? Because it's a major level of resistance that was happening as price was pushing down. So that makes this a counter trend daily level of structure. And what did I just say that I do at counter trend daily levels of structure? Let me delete all this so I can actually draw out everything on a lower time frame for you. So as I got into this level, I went ahead and dropped down to my 4-hour time frame. I saw that we created our first top, and this looks messy, but that's on purpose. I wanted to give you guys an example of a messier double top, because you're not going to come in contact with perfect situations every time in the market. That's just not how things work in trading. But I do classify this as a valid double top because we came up to that first top, we created a pullback. At that point, what do? I create my termination zone using the wicks and the bodies of that first top. So since that's already been done, I now just have to wait to see if price eventually pulls back to that level and terminates before closing above my zone. Does that happen? Yes, it does. After we terminate, do we get a red candle showing selling pressure? Yes, we do. And that is about the time that I decided to enter on this trade. And as you can see, that trade has worked out really well so far, pushing down. But just so you understand that things like this, even this strategy, as accurate as it is for me, is not anywhere close to 100%. I normally win somewhere between 55 and 60% of my trades, and I normally get a really good reward to risk ratio on these types of trades. But let me show you a trade we actually sent out in email analysis. By the way, we sent out this pound yen in email analysis as well. But here's another one, right? We have an area of structure looking left that I'll show you on a daily chart in just a moment. We have price creating a high, then creating a pullback, then pushing up to our high, then giving me a reason for entry with a red candle. And what happened next? Price just pushed higher. Again, nothing in trading is 100% accurate, so I wanted to show you that just so you understand that nothing always wins. Now, I am going to be uploading a very detailed version of this strategy into the TTC Forex University within the week. And on top of that, we're going to start including the Pro Trader report, which is a report I send you where it's showing you every zone I'm paying attention to throughout the week. There's a video version of that called the Weekly Setups video we're adding. And on top of all that, we're also going to be adding email alerts like the one you saw on the pound yen and like the one you can see here on the Aussie Canada as well. We sent this out to members as well. I'll put that on the screen. But as you saw on the pound New Zealand, They don't all win, of course. But anyway, all of that is going to start being included in the university. And I'm telling you this because with all of that added, it's going to cause a lot more work for me and my team. And with that being the case, the price of the university is going to go up. But right now, you can still get in at the original price of $497. So if you're interested in that, go to www.ttcfxuniversity. The link is on the screen and in the description. If you're not interested in that, you're still a badass, and we need to talk about the next level of confluence that I like to use with double top patterns. Let's check that out. My second favorite way to add confluence to double top trades is by using something called Rsi Divergence before I see the double top. Now for this, you will need a RSI indicator, which can be found just by going to indicators on TradingView or any other platform. My RSI has exactly regular settings, just length of 14. So what is RSI Divergence? RSI Divergence is when price itself is making higher highs, and here, let's pretend this is the RSI. RSI happens to be making lower highs. So if this was the case, price making higher highs, RSI making lower highs, this would be what we call divergence. In this case, where we are in price, is there divergence happening? Our RSI is right here. Price obviously is right here. Yes, there is. Why? Well, because we have a high of price followed by a higher high of price. We have a high on the RSI followed by a lower high on the RSI. This is the definition of divergence. So if I play the market forward here on replay mode, you'll see that we then push down. What do we do when we push down? After I see RSI divergence, let me explain this in detail. After I see RSI divergence, I do go ahead and look for that pullback, that initial pullback that we talked about, where price is heading higher. We start to pull back. After that happens, what do? We grab a box and create a termination point from the highs to the highest bodies of that previous swing high. So after I see divergence, that's what I do. After I see divergence in a pullback, that is. After that pullback, what am I waiting on? Price to get to that area, to not close above my high, and doing it this way. I do not require there to be structure. If there is structure looking left, this is an ideal situation. Structure looking left, divergence on the RSI, and getting a double top. I could trade an aggressive way in that case, but in the case of just having divergence and this double top, this is when I trade the more conservative ways of entering the double top pattern, which would be the close below the neckline or even close below pullback, and then a continuation after our double top. Let's see what happened here. We get that failure to close above. We then get a push down. That would be the aggressive way to enter, and right there would be one of our conservative ways to enter. So let me discuss a little bit about stops and targets while we are here. For stops, all I do is ensure that I'm above this wick, the highest wick of our double top. I normally go 1 ATR. I have a full video on ATR. I'll put in the top right corner, or you can just look up ATR. I think I'm like the first or the second video that pops up. But I either do a ATR, you could do a certain amount of pips above that. It's not really going to affect things to a really high degree. And for my targets, I always do at least a 1.4 to 1. And I normally move my stop to break even and manage the position from there, but I'm not going to explain all of that in this video. But essentially, your stop needs to go above the highest high of the double top and try to get a more than 1 to 1 reward to risk ratio. But in this case, I shouldn't have taken that off, but as you can see, if I click play, that trade would have worked out really well. Again, nothing's 100%. Every trade won't do that, but that is another way I like to add confluence to my double tops. Just as a quick overview, we're looking for price to be making higher highs, RSI to be making lower highs, and in this situation, I like to use the more conservative ways of entering in this situation. So everything we've talked about so far has been going short, meaning finding the top of a move out of price, seeing that double top situation, and then selling to go short. But you can also use double tops to anticipate a reversal if you're in a buy trade. For example, I did a video a few days ago and it was about Bitcoin, and people were asking me in the comments a lot, how did you know to get out in mid-November with your investment into Bitcoin? And the reason was exactly what you've been taught in this video. On Bitcoin, during that time, what did we see? Middle of November, this was like November the 10th or so, we have one top. We then have the rules met for a double top. We look at the RSI indicator. We have reversal scenario with RSI Divergence, I didn't sell at the very top. That's not, like, no one's really capable of doing that. But once I saw this reversal, I saw break through the neckline, I saw a pullback to the neckline, and I saw the continuation of this reversal, I got out right in this area, somewhere around there, because of all of that information coming together. So the double top strategy you've been taught throughout this video not only can be a great way to go short, sell the market, but also can be a great way to anticipate a reversal if you're in a buy trade on any asset out there. Also, I don't have time to go over double bottoms in this video, so I did it all about double tops. Flip it upside down. It is the same exact thing. Just flip all the rules upside down for double bottoms. With that said, keep in mind that we are going to be adding a ton of material, new content like the discretionary trading course, similar to what you learned here, but in much more detail, along with advanced patterns, the Pro Trader Report, weekly setups video, and also email alerts. All is going to be added into the TTC Forex University within the next couple of weeks. And right now, you can still get into the TTC Forex University for $497, but because of all of that extra material and extra work for me and my team, we are going to be raising prices. So if you want to get locked in at $497, the link is in the description. If not, that is completely fine. I still think you are absolutely awesome. I still hope that you trade green, but I do ask, if you're not subscribed, what are you doing, bruh? Or lady, what's going on? Hit that subscribe button. Go ahead and hit the notification bell if you have not already. Go ahead and click like for me if you made it to the end of the video. Also comment and let me know that you made it to the end. And I will talk to you in the next video. See you soon.